Boom. There we go. Welcome, guys. How y'all feeling? How y'all feeling? Drop in the chat how you feeling. Drop something you're grateful for. Y'all already know how we do. Drop something you're grateful for today in the chat. I'm grateful for every single one of you all taking time out of your Saturday afternoon to hop on this call. So I'll start. What else y'all grateful for? Go ahead and drop in the chat, guys. Let's start this call off with some gratitude. Tico is grateful for his kids. That's what's up. Grateful for this Saturday call. What's up, Mad Tunes? I got to send you one for your laptop too, bro. If you a DJ, you getting some stickers. Dinaj, grateful for life and this opportunity to get rich. I love it. I love it. Monisha is grateful for building new bonds. Love it. Could tell you was on the train last night. Right? Andrew's grateful for having a peaceful day to hang with her kids. That's what's up. Opportunity, grateful for opportunity. Grateful for your new sign up. Yes, Keisha. Michelle is grateful to be off right in time for this call. I'm telling you. Livingston is grateful for this amazing Saturday above ground. Definitely, guys. Grateful for the trials that's behind us. I like that, David. Derek is grateful for vibes. Okay, he's grateful for the vibes on the call, right? Nah, guys, appreciate y'all, man. We always want to start these calls with an attitude of gratitude because, you know, in order to be blessed in any area of your life, guys, you got to be grateful for what you already have. What you have right now, what you've experienced in the past, and what you're about to experience. And I'm going to set the expectation right now on this call today that you guys are gonna be grateful after this call because you're gonna have things go off that make sense to you. That's gonna connect the dots when it comes to this incredible skill set. Like Nai says, that gives us the opportunity to get rich, to create wealth, right? This is something that's gonna be able to change our lives and give us freedom. That's what this whole thing is about. It's about freedom, the freedom to be able to make money from home, to be able to make money from your phone, to be able to make money as long as you got an internet connection and no longer have to be confined to a job or a cubicle or a shift or an office, right? No longer will you have to, hope that you get off in time to make these calls or you can't get to an event because you can't get the time off, right? That's what we're doing this for. And I need y'all to always remember that whenever times get challenging and you feel like, one, you're not getting it, or two, you feel like you want to give up or you want to quit. Remember why you're doing this. You're doing this to get free. And freedom has a price. And what's the price? The price you've got to pay, guys, is being willing to be committed, consistent, and really tap in and lock in to learn this skill. This skill will change our lives, guys. I went back to basics. I told y'all I'm in phase 1. I'm treating this thing now like I just signed up. I told y'all that on the trading side and on the business side. I'm back to phase 1. And I was going over some basic fundamental material in the Academy on Support and Resistance. And because time has gone by and I understand more concepts because I've been implementing this, I was like, yo, so much things click for me now that in the beginning made no sense. Right? Either it didn't make sense or I didn't really understand how important, and I didn't have those aha moments. And I said, listen, this stuff clicked for me today. I know it's going to click for the family as well. So why not bring it back to basics? Okay. So today's call, guys, is on, one of the fundamental foundations of trading, okay, which is support and resistance in the market. Okay. Support and resistance. All right. Now, if you have no clue, you never even heard that term before, that means you just signed up today or yesterday, right? Because these are some fundamental principles that are taught really, really, really early on in the beginning of the Academy. Okay. And if there's some things you need after this call, one, this is going to be a recording, so you will have access to watch this again. Two, go in the Academy and go watch educators teach on support and resistance, having different perspectives, hearing the same concepts from different people, from different voices, guys. It helps you to understand. Write this down. Repetition is the mother of all learning, okay? The only way you know how to count from 1 to 100 is because when we were in elementary school, they made us do it over and over and over again. The only way you know how to write your name is because you had to do it what? Over and over and over again. Repetition. You remember kindergarten, guys? We used to be in class writing the letter S all day. S. Follow the dotted line. Y'all remember that? The only reason I remember that, y'all, is because my nephew at that age. And I'm like, G, that's boring. You writing G all day? Capital G, lowercase g. Follow the lines. Now do it without the lines, right? Repetition, okay? Repetition is the mother of all learning. So that's not just for basic fundamentals in school, that's for anything in life. So with trading, we can't think that we're going to learn of a concept in these markets and do it one time and get it. You don't think you could watch a video once and get it. You got to do it what? Over and over again, all right? So once you grasp that concept and you understand that if you're going through the academy, you're going through the lessons, you're covering different topics and things don't click to you as fast as you wanted to, or it doesn't really make sense the way you wanted to, all you got to do is go do it again. Listen to it over and over again. Eventually it'll click. All right. So today we're talking about support and resistance in the market. We're going to be like on the charts, basically this entire call. So get your pens, get your papers, utilize the chat feature, guys. This is interactive. Y'all know I like us to interact with each other and engage. I don't only want to just be talking to myself, okay? So if you got questions, if I'm asking questions on the call, answer the questions, okay? I'm doing it for a reason. So we're gonna do most of this call using TradingView. And today is about concepts, guys, all right? Today is about concepts and understanding. So let me bring up my screen and share my screen with you guys. Okay, can you see my screen? Everyone can see my screen, right? Cool. Boom, boom, boom. Let me open it up so I can see y'all. Good stuff. All right. So guys, support and resistance. Now, let me go over here to a blank screen. Okay, we're going to go over some simple concepts today, guys, but I promise you it's going to make sense. And y'all going to be like, I can't believe I didn't understand this. That's how I felt. Okay, so this is how you think about support and resistance in the market. So y'all know that the market is basically all of these squiggly lines and these candlesticks. All this represents is a movement of price of a particular currency or asset in the market. Price is always moving up and down. That's all these lines mean, okay? What we're looking for are different opportunities to be able to use this market to be able to place trades to make money. But we got to understand some concepts, okay? Some principles, some fundamentals. Just like we know gravity, if you throw something up, what's going to happen? It's going to come down, right? That's a principle. You know that it doesn't change. In the markets, there's also fundamentals. There's also principles that you can learn and understand, and it can help you become profitable in the markets, okay? So the way you want to think about support and resistance, guys, is like this. You want to think about it as a hallway, okay? Let's check this out like this, right? A hallway. Let's picture you're in a house and this is a hallway. And we have, okay, and we have a basketball, okay? Guess what? If you are using a basketball and you bounce the ball on the floor, sorry guys, hold on. If you bounce the ball on the floor with all your might, what's gonna happen? Drop it in the chat. Only reason I don't want y'all to unmute is because I don't want it to get chaotic, but drop it in the chat. I'm looking at the chat. If you bounce a ball in your house on the floor with all your might, what's gonna happen? You bounce the ball down, right? It's gonna bounce back up, right? You hit the floor, the ball hits the floor, it's gonna bounce up. Now let's say you do it with all your might, and this is a hallway, okay? You bounce it off the floor, and let's say it hits all the way up to the roof, to the ceiling of your house. Once it hits the ceiling, what's gonna happen? That thing's gonna fall again, right? It's gonna go back down to the floor. When it hits the floor, what's gonna do? It's gonna bounce back up, okay? Guys, this is the concept of support and resistance in a market, okay? The ball is price. In the market, price hits different floors and ceilings. So we're gonna actually write that here. This is the floor and this is the ceiling. Okay, this is the hallway, remember, okay? This is the floor and this is the ceiling. Now, think about it this way now. Now, sometimes you bounce the ball off the floor. It may not always go straight up to the roof. It may bounce halfway, right? Then what it's gonna do? It's gonna bounce back down. Then you bounce it with more force. It might almost get to the ceiling, come back down, okay? Then you hit it dead hard, okay? It goes to the ceiling. Well, this concept here makes sense. This is literally, guys, what support and resistance is in the financial markets. It's a ball bouncing in a hallway between a ceiling and a floor, okay? Now, in trading, the floor, okay, the floor is called support. Because if you're thinking about this hallway, if you're walking in a hallway, the floor supports your feet, right? And the roof or the ceiling is above your head. So I like to call this, or what we call this in trading terms, the ceiling is resistance. Am I the only one seeing a black square covering part of the screen where it says recording? Anyone else have another issue? That's what y'all seeing? What y'all seeing? Someone screenshot it and drop it to me. Hold on, let me try to screen share again. What about now? It's good now?
I can see it fine.
Okay, so everyone, y'all, it was fine, fixed? Okay, cool. All right, so y'all fine now? It looks cool now? I mean, if whoever was having the problem, it's okay for you now? Okay, now I just messed up where I was at. Okay, here we go. All right, cool. All right. Y'all see my diagram, you mess up now. Okay, there we go. All right, cool. So this is the floor. This is the ceiling, okay? Your floor is known as support. Your ceiling is known as resistance. Make sense? So let's pull up the real market. Let me just open another chart, and let's look at the actual market, okay? And let's look for some ceilings and floors in the market. So as you can see, these are some squiggly lines, right? But now that you have an idea, a concept of what we're looking for, you're looking for areas, okay, of support and resistance. But before we go there, let's look back at this real quick. Okay, let's go back here real quick. Sorry, y'all. Well, I might have to use a different thing to draw on because this ain't working out for me. Hold on, where is it at? I cleared it. Okay, y'all will get it. So I used the same chart. That's why, y'all. I was dumb. Okay, I was dumb. Actually, let me go back here because this is going to be important. Okay, y'all got time. So let's do it. Let's do it again. Ceiling, floor. Okay, we got our ball, and price is gonna go support, resistance, support, resistance, support, resistance. Okay, cool. Make sense? So now y'all got it. We back on our back in our vibe. Okay. So what you look at here, remember we said that this is support. This is the floor, which is support. And basically, guys, what that means, okay, is every time price gets to this level, it supports it. Okay, this level holds a price, like it doesn't break through it, it holds it up. Whenever price gets to this level of at the ceiling or the resistance, it's still what's the word? Confines it. Okay, so you looking at this as a hallway, and we're just staying within the support and resistance. We're staying within these two zones. Okay, so all of these points here identify times where the ball hits the roof, but it bounces right back down to the floor. In the market, guys, this happens all the time. And we're gonna look at some example on a live chart. So let's go here. Let me pull up another chart so I don't mess up that thing I just had. Still USD CAD. Okay, cool. So let's bring up the market really quickly. Let's take it back this way, right here. Boom. Okay, we're looking at this area in time. So I'm going to draw a line from here to here. We're looking in between these white lines. Don't look at nothing to the left of that line and don't look nothing to the right. We're only looking in this area right here. So what we're looking for is to identify areas where price came up to a specific roof or to a specific floor. And we want to identify those areas in the market, right? So I'm going to do it and y'all going to understand as we go through it. So if you look here, okay, let's just take a look right here. Okay, zone in on our area. You can see that price came, okay, down here. Y'all see this? Price came, you draw a circle. Price came right in this area here where that little wick was. Price came down here. Boom, right? Price also came in this area. We're looking for areas where price came, but it bounced back up. It reacted, it bounced. In this area, is safe to say that. Look at this again, right here. Do y'all see that? Yes or no? Y'all seeing what I'm looking at, right? We're looking for areas where price comes down and then it bounces back. So these are 4 areas. Let's just use these 3 for right now. Looking in this area, okay? I'm gonna erase those circles so it don't be confusing. But basically, we can like draw a line right here to identify where price touched right here. Price touched right here. If we zoom in on this, if we really zoom in, you can see price touched right here. It broke through here, but it touched and bounced back here. Okay. I'm going to talk about something else, but I don't want to confuse y'all, but do y'all see that? So basically price touched or bounced from here 3 times just based on this little area right here. Okay. Now let's look for where it bounced up to. Let's look for the roof when it fell back down. So we can see, okay, when price bounced from here, it bounced up all the way to about here. Boom. When it came back down here, it bounced up to here. Okay. When it came here, it bounced back up to all the way up here. This is the highest point, right? Well, it actually bounced all the way up there, but we won't look at that right now. Just want to show y'all something here in the market. Okay. It bounced up to here. And y'all excuse my drawing. I'm not the best at using these circles. Okay. All right. So what we look at here, you can, okay. And actually right before this, when price came down, remember we're looking at from this white line, price came down, but it didn't reach our floor. Okay. This is what we call a minor support, but don't worry about that right now. We're only looking for these. But right here, it's safe to say when price bounced from this level, it also went right back around here. Y'all see that? Right there. So we got 4 points round in the same area. Let's just say we draw a line right here. Okay, I'm gonna move these circles so we don't get confused. Okay, so look, price came in this area, bounced down to our floor, bounced up to our roof, and it actually bust through it. Okay, see, this ain't a good example because I didn't want y'all to see a break yet. I'm gonna show y'all a better example, but just want y'all to make sure y'all getting this. Came here, it bounced here to the roof. Came down here, bounced back up here. Now stuff happened over here, but we're gonna talk about that in a minute. Okay, but check this out. If I wanted to find an area where price did not break through at all, I can bring this up to all the way up here, because check this out. From our white line, price came close to it here, right? Price came up, but it's not close, but it came up, bounced back down, bounced back down, came up again, came up again, came close, didn't touch it, but y'all can see it's coming up to that area. Do y'all see this? Okay, y'all see this? So this area right here is actually a level of resistance that I can use for our example, just to show no breaks, okay? Just to show bouncing. So it came through here, kind of almost got to the roof, dropped back down. This one wasn't as strong, dropped back down, but this one hit with some force and came all the way up to the resistance. Y'all see that, right? Okay, right? So yeah, I have the pencil on, I think. Yeah, your pencil's locked. So check this out, okay? So this is your level of support. This is our ceiling, and this is our roof, okay? Now here's some characteristics, and you might want to write this down. Any reason why you're looking at the 4-hour candle? No, we ain't talking about no top-down analysis. We're just talking about support resistance. We could have been doing this on any chart. It doesn't matter, okay? That ain't relevant for this lesson today, okay? But that's a good question, my tunes. But if you're on the call and you're brand new, and this is your first time even seeing support and resistance, does the concept make a little bit of sense to you right now? Yes or no? Drop it in the chat. Okay, I see some yeses coming in. All right, cool. All right, so, all right. So now, here's some characteristics of support and resistance that I want us to write down. Okay, you want to write these down in your notes. The first thing you need to know, guys, support and resistance are the same thing. And I'm going to show you what I mean in a second. Okay, just write that down though. Support and resistance is the same thing. Okay, the lines that we're drawing right now, which eventually by the end of the call, we're going to create those into zones. They are the same thing. It just depends on where price is currently at. So let me make it make sense on our example here. So let's just say, okay, let's just say price comes down here, but it doesn't support it. It busts through it like this. Okay, then guess what's going to happen? Price going to bounce back up to this support, but because it's underneath it, guys, the support now is a what? Drop it in the chat. So if price is down here and it's coming up to this level, what is this now? It's now a resistance because now it became a roof and no longer a floor. Okay. I'll rewind that for a second because I know some people like, what? So let's say price came from up here, guys, and now price is down here. Okay. Price comes here and stops. Okay. If it stops here, this now becomes the new floor. And now when it hits the floor, what has to happen? When it hits a floor and it's bouncing, it gotta bounce back. So now it bounces back up right to the same level. But this time, because it's coming from the bottom up, this is now coming to the roof. So now this support has now become a resistance, which is why I say support and resistance is the same thing. It's the same line. It just depends on what direction price is coming from. Does that make sense? So when price is above and it's coming towards us, towards the level, it's coming down to support. But if price breaks below it, now it's coming back up. It's coming towards the same line, but the line is now resistance. If you don't understand that, drop a 9. And guys, this is the time to tell me, like, don't not say, okay? Okay, cool. Okay, cool. I appreciate you, Cressa. So let's talk about it, okay? Let's talk about it. Okay, let's go back again. All right, so if price, let's say price comes right here and stops here in the middle. Let's say price is right here right now, okay? If price comes down to the bottom, what is this line going to be called? If this comes towards the bottom, is this support or resistance? Drop it in the chat. And I would recommend someone who don't understand to actually answer so you can make sure you get it. Okay, it's support, okay? Now, if this price was actually going up, what would this be? Would this be support or resistance? Okay, it'll be resistance because that's the roof. Just always think floor and roof. And once you decide, then you know which one is which. So I like to say roof is resistance because the two start with R, right? And then the floor is the support because the floor is your support, right? It's the support on your feet. So let's just say, so you guys got that. So think about it. If price is coming from above and it's going towards one of the lines, if it's coming from above, it's a support. But if it's coming from below, it's a resistance. So now, guys, let's just change it up. And instead of the line being, or the price being in the middle here, let's just say price breaks this support and comes here and it's in the middle here. If price is coming to this line down here, let's just say, just for instance, if price is coming to this line, is this a support or a resistance? It's support because that's a floor. It's coming down, right? Price is above, it's coming to support. If this was going by, if this went like this, would this be? What is this right here now? What's the white circle now, right here? If price came here and comes like this, is this a support or resistance? Boom. See, so some of y'all who didn't understand, now you understand, okay? Yes, it's a resistance. So keep in mind, support and resistance is the same thing. It just depends on where price is at, okay? That's like being on the second floor of a building. That could be upstairs or downstairs, depending on where you're coming from. Make sense? So if you're on the second level, someone who's downstairs said they got to go upstairs, but someone who upstairs got to come downstairs, but you're still on the second floor. Make sense? Boom, good stuff. Okay, cool. So the first thing, okay, the first thing that we talked about just now is support and resistance is the same thing. So these are characteristics of support and resistance. Okay, SR is also known as support and resistance. If you be on sessions with Millie Mills, you always hear I talk about SRTs, that's support, resistance, and trend lines, which we'll do in another episode of Saturday School, okay? But today is support and resistance. So characteristics of SR, okay? So support and resistance are the same. It just depends on the price. That's something you need to know. Characteristics. There we go. All right. So the first characteristic of support and resistance, guys, okay? When support breaks, it becomes what? Fill in the blank. When support breaks, it becomes boom, resistance. Look at y'all getting it, okay? When support breaks, it becomes resistance. So on the flip side of that, guys, when resistance breaks, it becomes, fill in the blank, support. Okay, shouts out to Naj. Tico, I see you, but you've been here. Naj is new. Edo, shouts out. That's what I'm talking about, okay? When support breaks, it becomes resistance. When resistance breaks, it becomes support. So let's just do an example of resistance breaking before we move on to the last thing. Okay, so look, this is resistance now, right? So guess what? When resistance breaks and it comes back, now this is it's an area of support now. So when resistance breaks, it becomes support. Y'all got it? So we could even make this even a little, we can make this a little, add a couple things to make this even better. Check this out. So we're gonna take this line, we're gonna bring this here. Let's move this, okay? We're gonna call this support. So all of these levels here, okay, are support, right? This up here is resistance. And this is resistance, right? Boom, boom, boom. Okay, y'all see that, right? So these are resistance, these are support. I really should have been using other color lines because this could look crazy. But y'all get the point. Oh, okay. I feel like I'm in art class. All right, cool. So these levels now are support. Now let's check it out. When support breaks, this is a break, okay? We're gonna call this like a breach. This is a break because it doesn't support it. It breaks through. Once it breaks, this now becomes resistance. Boom. Y'all see that? This now becomes resistance right here. Okay, I will put it here. This is now resistance for this. Price breaks resistance, and now it becomes, again, support. Y'all follow me? Y'all got this, right? Y'all understand that concept, right? Good. So y'all got that. So now that y'all got that, the third characteristics of support and resistance is something that's key. Support and resistance is a zone, not a line. And we're gonna get to that, but just know that it's not a line, okay? We drawing the line right now to give you a concept, but when we start looking at charts, it's actually a zone. It's an area. It's not a one line. It's an area. Okay, and we're going to show why it's important to understand that. All right, so support and resistance is the same thing. When support breaks, it becomes resistance. When resistance breaks, it becomes support. And it's not a line, it's a zone. If y'all got that and ready to move on, drop some sevens. Y'all got that, right? Cool. All right, cool. So now let's look at a chart. Let's look at a chart. So I could take this off because we done talked about this on the last one. No, this thing is driving me crazy. All right, cool. So let's get back in our area. So this is our, we said that up here was our roof, our resistance, and down here was our support. Okay. Let's do one at a time. So let's do resistance first. Let's just look at this little area right here. Let's go into a smaller area to make this even clearer. Okay, so let's identify. Price came here. Okay, so we can bring it down even closer. Right here. Price came here, rejected. Rejected means it came to the line, but it didn't, it bounced on it, okay? It just bounced from it, it rejected it. Price came here and did the same thing. Look here, came super close, okay? Came close, but look here, it came here again, boom. Same area, boom, boom, boom. Y'all see that, right? Price, this is clearly a resistance. This is in our mind, we're saying this is a resistance because price came to this level and resisted, it rejected, okay? Now let's look at our three characteristics and see if we can, sorry, here we go, my bad. Okay, that makes sense, right? Now here's something else I want y'all to write down, okay? I was supposed to give you all this before, but I skipped it. Okay, so y'all got the three characteristics of support and resistance. Now I wanna give you three identifiers of support and resistance, okay? Three key identifiers or ways to know or identify support and resistance in the market. The first thing is you want to see bouncing from it or what we would call reaction from the level. Okay, you want to see bouncing. The second thing, okay, you want to see it become support. You want to see it be support and resistance. You want to see that same level be support, and then after a break, flip and become resistance. And I'm going to show you all in a second. Just write this down. The third thing is we want momentum. Momentum, whenever it breaks on a break. And I'm going to make this make sense. Just write it down. Okay, So these are the identifiers. Okay, so we want to see bouncing. So if we looked at this line here and say, hey, this looks like a potential resistance, right? Here's how we can have a checklist to know, is this really a support or resistance level? So is it bouncing? Does it come to the level and bounce? Boom, it bounced down. Comes here, bounce down. Comes here, even though that ain't really it, it still bounced down. It came to this line again, bounced down. Is it bouncing? Absolutely. Boom, check. Okay, check. All right. Now let's look at this level right here and see if this is a resistance right now. Does it become support at any point? We can look left. Let's look left. But remember, we only looking to my white line for right now because we're pretending like this is the market. So as of right now, you can see even where my white line started, price even rejected from there too. Okay, let's look. So where price is at, guys, and I don't want to, in our zone, does price at any point, based on what you can see right here, does it become support? Does this line become support at any point? No, right? Because it never breaks. Every time it comes to this line, it stays. When it came here, it came down. When it came here, it came down. For it to become a support, price has to break the line, and then it turns into resistance when it comes back down. Y'all follow me? So price, this particular one, it doesn't match. Okay, so it's bouncing, but it's not support and resistance. So if there is no break, number 3 is an automatic no, because there's not going to be any momentum because it never broke. Y'all follow me? So this is the 3 identifiers. It bouncing, but the other 2 aren't valid. So this here, at this point right here, this would not be a support and resistance right in this zone at this moment, up to this point in time. Okay? Ignore everything before and after. We're just looking at this example. Okay? Now let's look for something else. Let's look for another one. Check it out down here. If we just zoom in right here, look at here. Okay, let's look for another level. Okay, let's move our identifiers here. Move our little X's here. And let's look for a support now. Ignore this completely for right now, guys. Let's look for a level of support now. We're going to do another one. So that one that didn't pass the test. Okay, let's look for another level of rejection. Immediately, guys, okay, my eye. Okay, let's look. Let's see. Let's look at it. We're just looking for a rejection area. Let's look right here. Just because I see it so clear right here. Y'all see this little area right here? See all of these rejections? So I'm gonna zoom in over there. Y'all see how over here where I highlighted, see it's a lot of rejection in this area. What do I mean? Price came here and rejected. Price came here and rejected. Price came down here, rejected, here. Y'all see all those rejections? Y'all see that? Yes or no? All of this whole area is a bunch of rejection. It always comes to this area, then it always bounces up. So we can say that this area looks like a level of rejection because it came here, rejected once, came here, 2, 3, 4, right? 5, 6, 7. You see all the times it rejected. Is this support or resistance right here? What are we looking at this as right now? Support or resistance? This area right here. Okay, this is a level of support, right? Because we have a ton of different rejections in this area. Okay, price rejected so many times. Now, just looking at what I'm looking at right now, I'm looking for the, and we're going to get to that in a minute, of zones. Like you see how we put this line right here? We know that this is an area, clearly something is happening because it keeps rejecting in this area. But you see how like sometimes you be confused, like where do I draw the line though? Do I draw it here? Do I draw it down here? Do I draw it here? Do I draw it here? That's why it's not going to be a line. It's going to be a zone, an area. And I'm going to show you guys how to draw the zone in a minute. But does this make sense that you could know that just by looking at this chart, this general vicinity is an area we want to pay attention to because price always comes in that area and bounces. So let's go back to our characteristics of SR, right? Let's go back to our identifiers. From this area, is price bouncing? Is bouncing happening in our area? So remember, guys, this is our area we're looking at, okay? This is our area. Okay, boom, y'all say it's bouncing. So let's put a check. Okay, now let's look. Does support at any point turn into a resistance? Look over here, right? Just looking at this area to the right of us right now, just check this out. Price breaks, okay? So we call this here like the breach, right? So let's look right here on this candlestick, price breaks our support. You see that, right? It breaks with the support. Then when it breaks the support, what happens immediately right here? What happens on this candlestick right here? Don't look at this candlestick. Ignore this one. Just look at this one. If we was just looking at what I circled, what happened at that candlestick? It rejected. It served as a what? Resistance. Y'all see that? It served as a resistance. It came here, but it rejected from there. Now the next candlestick it broke. But I just want y'all to see that right on this particular candle, it served as a resistance because it respected it. Okay. Now, did we say it's a strong resistance? No, but I'm just trying to show y'all, make a point here. Okay. But it does show it rejected its resistance, this particular candle. So in our identifier is, did support turn to a resistance right here? It did, really, to be honest, it did. Now it broke right out afterwards, but it did. But let's ignore, let's act like we can't see that. Let's act like this is where the market stopped, right here. Oh, perfect. Okay, this is what we're looking at right here. This is all we can see. All right. So price, it turned to a resistance. So yes, it is a resistance. The third identifier is what? When price breaks, did it break with momentum? When price broke our level, look at this huge red impulsive candlestick. That it broke with momentum. You had a big candlestick. You got to think about it like this. If you bounce in a ball, for the ball to break through your roof, you have to throw that hard, right? It ain't gonna be no regular bounce. It have to be like a serious bounce for it to bust through the roof. Does that make sense? If someone trying to break through a door, they have to come with momentum to break the door. So the same thing happens in the market. If these are levels of support and resistance, for it to break, it has to break with momentum. Yes, with force. So as you can see, all of these times price respected it, but on this particular time, it come through it wasn't playing. If you zoom in, this is a huge momentum candle. So our third identifier is it stands. It broke with momentum. So keep this in mind. When you're looking for momentum or to figure or to look at a break in the market, you don't want to see small candlesticks. Okay, like look at this. I'm not moving our line. I just want to show you something. Let's just say right here was our support and resistance, right? And this now about to break. So this broke with momentum, but let's look at the upside. See how these like little baby candles? It's breaking the line, but it's breaking it with like no momentum. The little candles mean not much force, not much volume. right? You want price to break with momentum. So if we go back to where our actual line is, you can see price respected here, but look at this next candle. It broke it with momentum. So price is broken to the upside with momentum. That's another confirmation. So when it broke down, it broke with momentum. And when it broke up, this one here also broke with momentum. Y'all follow me? It's making sense? You got to break with some force. You got to put some pressure. All right. So you got to, those are the three identifiers. So that first zone that we looked at was a level of support, resistance. But for our example, it really wasn't, because it didn't turn into support at any point, and it didn't have any momentum. But our second example, it bounced, it broke with momentum. Okay, this making sense? So now let's go do it on the chart. Okay, this is, you know, let's do it some more. Let's look further back. Let's go back. I'm gonna even make it even, see if I can find another area here that works. Hang on. Looking for a break in the market. Boom. Okay, let's look right around here. Okay, let's look at this level, right? Let's look at this area right here. Okay, and I'm just picking random parts of the market, guys, for us to practice. Okay, but this happens in every chart, every day, all day. You just got to start developing and training your eyes to identify these zones. If you can start to identify support resistance in the market, guys, you can make money. Because when we learn how to identify them correctly and we know how to use them, and I'm gonna show you all that in a minute, it's gonna blow your mind. I was like, Sophie, you've been overthinking this thing. Like, you knew what you've been doing. Like, we understand the fundamentals. Then the more we learn, the more we complicate it. Right? And this thing really ain't hard at all. So let's look at this area right here. Let's look for a level of support. Okay, let's look. So immediately, okay, I see this area. This area right here interests me. Why? Because price keeps coming to that area like multiple times, right? Check it out, line. Check it out. So price came here, came here, came here. Then what it did, it broke with what? Momentum. And then when it broke, look what happened. Price immediately went back up and it turned into what? Resistance. We're like, that's a good level right here. This in here. You're like, okay, got it, right? So you know right here, it's support. Then when it breaks, it became resistance. So y'all, let's look at it. Let's look at it. Okay, let me get my little circle again. All right, I'm gonna change my circle to green for support and red for resistance. So look, so right here, we are support. Okay, right here, again, rejection. Right here, rejection. Then it broke. Then when it broke, it immediately turned into resistance. And I can turn that as a red candle, red thing. Y'all see it? Let's zoom out to see some more of this. Right? It turned into resistance. Price comes down and forms a new what? So think about it this way. If price comes and hits a resistance, that means it's going to have to find a new what? A new support, a new floor to the bottom. So if it came here, now it dropping, we just got to find where it dropped to and find another support level. So let's just look here. Right here again, guys, I see another level of support where price starts to attract. So check it out. Resistance, price comes down to this level right here. And what does it do? Let's zoom in, right? So y'all can see. What does it do right here? Supports, it supports price. Green, right? Then what does it do? It breaks through again. And when it breaks through, what did it do immediately? It come right back here as a resistance. Y'all, this is so easy, right? Resistance. Now you got to say, okay, if it's a resistance, that means it's a new what? A new support. Where the new support is. Let's look. Right about here. Let's just look at as far low as far down as it went. It went to here. Then it did what? It bounced back up. right? Then it broke through with what? With momentum. When it broke through with momentum, price comes back, and now it turned back into what? Look at it. It came back here now, and it's now what? Back to support. Back to support. Back to support. Y'all see that? Then it broke through again. And then it turned into what? Resistance. And look, wow, where we dropped our line here, where does it come down to in respect? The floor, support. Whoop-de-dee. Wow, I never thought so, right? It's exactly what we expect, y'all. Y'all see this? Is this making sense? Is this making sense to somebody? Does someone have like an aha, like, I get it, Dred, like this makes sense now, okay? It comes here as a support, comes back up here, and I'm gonna show y'all something about zones right now. Because look, it comes close to our line, but not really, twice. Okay, twice. Then it comes back down to our floor and breaks through with a nice candle momentum. Then it does what? Flips back to resistance, then it breaks through again. Then it comes back down as a support, then it breaks through. Then it comes back up as a resistance, then that bad boy starts to drop. Do y'all see this? Do y'all see this? Okay. Now let me show y'all something about the zones. Then we're gonna look at potential, being able to identify this on a chart and actually what it would be like if we was actually taking trades. I'm telling y'all, Monday, y'all about to make money. I promise you, Monday, y'all about to make money. But before we go to that, let me just show y'all one more concept. Is this making sense so far though? Need some water. If this is making sense and y'all getting it, drop some sevens. I gotta get water. Okay, cool. I see some sevens. Good. All right, good. I see plenty sevens for tomorrow. So I guess that means getting it a lot, right? Plenty sevens, I'm going to assume means, yeah, I get it for real. All right, cool. So let's erase this and let's do something. So here's what I want you all to understand. And this was important to me. Like this was something that I totally missed in the beginning because I just didn't understand. Okay. And it was like, what causes support and resistance? Like what causes price to come to this level and like go back up? Like what causes it to go here? What causes it to come here and then drop? Like what causes support and resistance? And guys, this is what happens or this is what causes support and resistance. Supply and demand, okay? Supply and demand. So think about it this way. Let's say, first of all, you got to know that the financial markets move because of large, like people with a lot of money, and usually not people, but institutions, right? Large banks, large investment banks, large hedge funds, people of millions and millions and billions of dollars. They have money they want to inject into the market. And when they make trades, it actually moves the market. Us as retail traders, y'all, our money don't move the market at all. That's why we got to just trade with the banks. We got to follow what they're doing because they are the people who move the banks. So here's what that means. If imagine us having a large investment bank, right? And let's say this bank needs to move $100 million. Okay, they need to move $100 million. And let's just say, I'm gonna use chart like gold. It don't really matter though. I could just use this. I could use this. Okay, don't matter. So let's say that the bank have $100 million they want to move. And they want to buy the price that they want to buy this particular currency at, okay, is 87.86, where I drew this line, right? Now they have 100 million. They can't just go put 100 million in the bank one shot. They have to break it up or split it up into smaller pieces. So they may you know, they could actually get into they could do 425 million, right? Or 5 times 20 million a time, or 10 at 10 million. But let's just say they have 100 million, and just think of the concept for a minute. Let's say, okay, the bank have 100 million, and let's just say they buy a position or place an order. Okay, they place an order right here for, at this price, for 25 million. Okay, 25 million. What happens in the market, guys? An order, so when price comes here, the order for 25 million is, they place an order for 25 million. When that kind of money comes into the market, price of that particular currency will always go up. Not saying it's gonna go up higher, but it's gonna go up higher than where they bought it from. So right now, price is here, price gonna go up, okay? Price gonna go up to this, to go up. Now, price may fluctuate, okay? But guess what? When price comes back down, because these banks, you have to think about it. This bank want to get, they still have 75 more million to go. They only invested 25 so far. You think they're going to buy another 25 million when price up here? No way. They want the price at the lowest. But guess what? When price comes back down here again, what you think they're going to do? They like price back to our 87.6. Be buying again. So they buy another 25 million. Right? They place more orders. They place another 25 million. When, what did I just teach y'all just now? When this amount of money enters the market, what happens? What's going to happen here? What do you expect to happen from right here after they place that 25 million order? Boom, price is gonna go up. Boom, price up again, okay? Price gonna fluctuate and do its thing again, you know? Come here, playing around. Price comes down again. What happens? Another order. Guys, this is what creates support and resistance, because it's coming back down so the other orders could get filled. So let's just say this time they freak out and say, you know what? We're gonna do 50 million, right? So let's just say they do 50 million, because they already do 50. And this particular order, they say, hey, we're gonna do 50 million this time. Okay, so how much have they invested so far? 100 million, right? So we know when price, right? When an order is filled, what happens? What price is what's gonna happen here? What we expect to happen after they fill this $50 million order? Price is gonna do what? It's gonna go up, right? Go up again. Now, as we notice, guys, you see our price keeps coming up to the same level right here, which is our what? Our resistance. Okay, our resistance. Now let's make something clear. So we know now, I'll put that in here, that this is our support. Okay, this is our support, clearly, because this is where the orders are being filled. So if we know that this is support, guys, you need to know that support is also known as demand. Okay, there's a demand for orders at this price. So support is where the demand is. And who has the demand? Buyers. This means that there's buyers who want to buy. There's a demand for the product or the currency. So let's just think in product, because that's what we think in. If there's a demand for Jordans, that means that there's buyers for Jordans. Does that make sense? So the support level in the market is where the buyers are at. This is where the buyers are. The resistance is where the sellers are at. Resistance is where the supply is, because the demand is for the product and the resistance is who supplies the product. So that's the supply, and that's where the sellers are going to be. Okay. Resistance is sellers. All right. Now, guys, let me see if y'all thinking. So let's say the 100 million has already been filled, right? and price is now coming down. What's going to happen? Do you think price is going to stay here? Or do you think price is going to break it? What you think is going to happen? The orders have already been filled. The 100 million is gone. So when price comes here, the banks don't care. So they ain't buying nothing else. So price going to keep coming down. I see y'all saying it was going to break. Yes. Orders have been filled. Banks have all their positions filled. Price comes back down to this area. It's probably not going to hold it anymore. It's going to break it. And then guess what's going to happen? That's going to turn into resistance and it's going to further drop. This is how downtrends and uptrends happen. Does this make sense? A lot of times, y'all, this was like game changing for me because a lot of times, right, when we're in the market, we get faked out a lot of times when we don't understand what's really happening. We're just looking at it as lines and technical analysis, but we're not thinking about what's happening in the market. So a lot of times we'll see like 2 touches, 3 touches in the market. We thinking, man, it's a strong level of support. When price come here, price about to bounce off of it. But really, the orders have been filled. It's probably it's a worse trade. Like we usually think, okay, like think about it. Think about it, y'all. Think about this. Let's say we're looking at this, even at the resistance. 1 touch, 2 touch, 3 touch, 4 touch, right? Let's say price comes back down again, and let's say it doesn't even make it to our resistance, our support, and it starts to come up again. A lot of times, what we think based on what we were taught or understanding support and resistance, but not understanding supply and demand, we'll say, okay, let's touch 1, 2, 3, 4 times. When it come up here now, this definitely gonna drop. But really and truthfully, it done touch 4 times, it probably ain't gonna drop. It probably gonna break this time. Does that make sense? See, and I realize when I think back about some of my trades, this is why I always be like, okay, I doing the right stuff. Why I losing is because I getting in the market after it done touch 8 times. After the 9th time, it's about to go the opposite direction. Okay, it's owning a hold for so long before it breaks. Okay, so guys, keep that in mind. And when you're thinking about where buyers are at, always know that the majority of the buyers that actually move in the market ain't us. I don't care if the whole of IM Academy be trading 1 trade, we don't have billions of dollars in the market, but banks do. So we got to think about them. That's why we always say you want to always trade with the trend, not against the trend, because if the banks are pushing the market up, who in the world are you to think you could push it down? You ain't got enough money. Okay, so keep that in mind. Does that make some sense to some of you guys? I think that probably helped you understand what's happening in the market. I knew it helped me. Okay, I knew that helped me. Now, what I want to do with you all is show you guys zones. Okay, show you guys zones, and then we're gonna do some we're gonna go through the market and identify some zones, and then we're gonna look at some potential trades, like potential entries on the chart. And this is some of the stuff that y'all gonna leave this call today and go practice this weekend. Okay, cool. All right, so the zones. Let's go back to our regular chart. All right, so let's go back to where we were at. We were right here. So I'm gonna erase my little circles just so I don't confuse y'all. But y'all know now that these little areas where it's touching is like the rejection area. So you know that now support and resistance is not a line, it's a zone. Okay, so let's just look at this. We're gonna look at this area right here, these 3 touches right here. Okay, so this is touch number 1. 1, 2, 3. Okay, so in this zone, so we know this is the area. We know this line was our general vicinity. But here's what you want to do. You want to look for the zone that encompasses all of the areas that reject it. So what do I mean? Okay, so let's just say we put this here. Let's just say we put a line here because this is that lowest area on that particular candlestick. This touched almost exactly there. This one it almost touched, but it wasn't quite there. This one almost touched, but it wasn't quite there. So what you want to do, guys, is you got to find, okay, a zone And then you also want to get as close to like candle bodies as possible. So you see how right here, this line, this dotted line that I'm putting is here. It's like, it basically shows you the bottom of these two candles, almost exactly the bottom of these two candles. And now, because we drew that line, the two wicks that weren't touching before are now in this area. So it's actually a zone. So it's like here, between those two dotted lines, between those two white lines, and I'm gonna remove them for a second. So check that out. So this area, so now that I removed it from one line and it's now a zone, y'all notice now all of the touches are included. Y'all see that? Y'all see the difference? If we had only had a line, our entries was not gonna be accurate because you might be waiting for price to come here. It might never get there, but it was in your zone. Okay, you see that? So it's a difference. It's a difference. All right, now check this out, right? If you see price here, broke support, and then it turned into resistance, but you notice here, it also didn't touch our zone, but it came close pretty twice. What I would do, guys, is I'm gonna take this zone and actually make it here. So I make it touch it. So now all of my wicks are included. And then all of my zones, check this out, like my resistance is also basically touching. Now I'm gonna extend this zone for a second. I'm gonna extend it both ways, this way and this way, because I just wanna see what's gonna happen. Hold on. Hold on, y'all. Okay, right here. Okay, so that's that. Now, let's look for, let's just, because we had already done this, we can just use this again. So I'm going to remove these circles so we don't get confused. Remove these arrows, let's clean it up. Now we know we're looking at this area for our support zone, okay? And actually this line, guys, this zone, I'm going to make it green because it's a support. And what does support mean? Support means demand, which means buyers. When we buy in, is green. This applies to Forex and HFX, y'all. Like this is gonna be the same principles if you trade in HFX. Same thing. You identify support and resistance. You know, price get to the support, about to bounce up. I'll go into the resistance, about to go down. Y'all, we about to make so much money. Okay. So check this out here. So now we're looking at our this zone, this support. Okay. We know that support came in the area. We're just looking for to encompass all the levels. So let's remove that line. Let's go from the top of that body right there. Okay, let's go this way. And I'm going to take it down to the furthest point, which is right here, which is, you see, right, I'm using this point over here, guys, over here, right here. Okay, that's the wick I'm using, but I'm just extending it this way. I'm going to that wick, and then the top, I want to bring in these into the equation. So I want to bring my line up to about here. So now all of these wicks are in. I'll actually bring that right here. All of these wicks are in, all of these support, this in my zone. Price broke through. When it retested, it's back. My wick is still in the zone. Y'all see this? This thing comes right here. See, the price broke through. Now it's a resistance. Came back up right to my resistance. Y'all seeing this, right? Y'all seeing this? Now, what I want to do is just show y'all some opportunities if we look in between the zone. So I'm going to bring this cross. Just want to show y'all what's possible, like what's going to blow your mind. But before we do that, let's look for one resistance. Let's look for a resistance in this area. So a resistance in this area would be somewhere around here, right? Because you see price rejecting so many times around here and here. Let's see here. You could go from here to here. So let's do like from here to like where that candle, the top of this candle. You don't want to go crazy with the wicks, like, because think about it, y'all. Let's say this one, this has a huge wick, but that's way too high. But this also could be, hold on, let's see, hold on, let's see. Yeah, I'll just draw my box to the top of this wick here. I ain't going all the way to the top here. I'll just do to the top of this wick here, right here. Okay, that's gonna be my zone. But I'm gonna turn it red because resistance is selling, right? So we looking to sell at that level. Okay. All right. Now let's just play with it for a second. Let me just show y'all something that blew my mind. So is it clear to say that y'all could see, like, y'all can make a little bit of sense out of what I'm saying with these zones, right? Now, if we were actually trading, let's pretend for a minute. If we were looking for opportunities to trade in the market, so we can say, okay, let's just say we starting right here. Price is in our rejection zone, right? It's in our sell zone. So if it's in our sell zone, what are we looking to do? Sell, right? So let's just say we looking at this candlestick right here. Let's just say this is the candlestick. We can't see none of this in the market yet, guys. Let's just pretend, okay? But based on price being in our supply zone, you know, supply means we're looking to sell. So it's in our zone. It rejected. You can see price going up and it rejected, and it's in our zone, man. I'm looking to sell. So let's just pretend I said, hey, it's in my zone. I'm about to go for a sell. Sell is what we call a short, right? On short is sell, long is buy, guys. Okay. So let's say we were going for a sell right off of this candlestick I'm on. Check this out. Okay. Check this out. Let me blow your mind. Okay. So don't even worry about stop loss right now, but just say we were looking at this for a sell. We entered the market right on this candlestick. If we selling, where are we selling to? We selling to our what? Our support area, right? So our TP would be right at the edge, not all the way to the bottom, to the very start of our support area. Okay? We trying to say, hey, we gonna sell from here. We getting in the market for a sell because price bouncing. Our target gonna be our support. So, and our stop loss, guys, gonna make sure be outside of the zone, higher than the zone. And usually I would say, like, if I was looking at this, I would want to clear these wicks. So I'll say, like, at least, me personally, I would have put it above the highest wick. So about here, which would give me a 2-to-1 ratio risk to reward, which is great. So let's just say I had placed a trade right on this candlestick and I was going for the target to be here. And I put my stop loss here. Y'all, would we win or lose this trade? We would automatically win this trade. As soon as you entered the trade, right? Price came down, retraced and closed here. Then price shot up above our zone, but it wicked, no near our stop loss. And then what did it do? All the way down, baby. Trade won. Boom, right here. Won the trade. Y'all see that? Look at that. Yo, we win the trade here. Right here, price hit our target. TP. One candlestick would have been in drawdown and the rest is straight blue. This trade would have gave you, but I'm marking up on the daily, guys. And normally we don't trade on daily because we don't really position trade, but this works for any time frame. But just check this out. If this was a trade we had entered, just based on marking up support and resistance, 322 pips in the blue. The most drawdown you would have been in if you had entered the trade here was, the most would have been 65 pips in drawdown, but to gain 322. And it would have happened in, this the daily, so it would have happened in 1, 2, 3, 4, 5, 6 days. You would have had 300 pips just off of support and resistance. We ain't used no indicator. We ain't used nothing else but support and resistance. Do y'all see how this is about to change the game? I don't know if it's only me who excited. That's it. It's about to change the game. So let's do a couple more. Check this out. So this is a winning trade. We would have won that trade. Now, guys, look, this is why we got to stop. Like I'm telling y'all, when I was studying last night and this morning, I was like, I got to do a training because the game about to change. So you entered this trade on this little arrow. We won this trade. It's a winning trade. Now, guys, let's just continue to talk. If we now price hit our TP, and now where is it at? Price hit our TP, okay? It came back up. The next candlestick closed here. Next candlestick open. And what did it do? It came into our demand zone, our green zone, which means what? If price is in our green zone, what we about to do? About to buy. So guess what? We jump in for a buy on this candlestick. Let's say we jump in right here. Boom. Where is our TP gonna go? Our TP is to the bottom or the very start of our resistance, which is right about here, right? Where's our stop loss go? I would look left, always look left, and you want to stop under the last like little bit of wicks, okay? Under the last wicks, or you want at least a 1-to-1 ratio if you're using this tool. But let's just say we're using wicks for now. Let's say you put your stop loss right here. Guys, check this out. Let's just look at it. Price, we entered here. We entered on this candlestick because price was in our buy zone. We entered the trade here, no drawdown. Next candle, straight to TP. We win again, no drawdown. Another winning trade, back to back, on the same pair, in the same zone. And we ain't finished yet, check it out. What happens next? Hits our TP, winning, we good, we golden. Price comes in our zone, it rejects in the next candle, we still in the zone. We in the red zone, what we about to do? We in this bad boy again for a sell. Boom. Where's our TP? Support zone, boom, just like that. Look at this, no drawdown. Boom, another 300 pips. Y'all, those 3 trades alone, back to back to back, would have give you 1,000 pips. And then it happened like 2 more times, right? We go here, price is here, we get back in for the buy again, and again for the sell. Ping pong. And then let's look at something. And this is why, guys, like this is the daily. The higher the time frame, the stronger the resistance and the support. They strong levels, but your trade gonna take longer to play out, right? But the levels are strong. Good at if you're looking at a 50-minute, but this still works. But check this out. Let's look at right here. Let's look at right here. So let's say now price is right here. Okay, price is here. Price is right here. Okay, boom. Okay, we looking at price. We say, boy, we getting in for a what? A buy again, right? So we get in here. Our TP is at the start of our resistance, right? Our stop loss, right? Remember, we can't see this yet. So we would probably put our stop loss where our last stop loss was, will be right about here. Okay, and what would have happened? Price would have gone up a little bit, then price reversed, came back, and it would have hit our stop loss. We lost this trade. But guys, we didn't win 3 trades back to, we didn't win 5 trades back to back. We lose this one, we ain't even tripping. Okay, we ain't even tripping. But then guess what happens? We're out the trade, but we noticed that price broke with momentum, and then it did what? Turned into resistance. So we know this thing about to do what? It about to sell. We broke, it retested, it turned to resistance. Now this thing about to sell. So if you were to get in because you identified these wicks that price is resistance, now we can actually enter this trade. I can make this smaller so we can do this, right? Now we can actually enter this trade for a sell anywhere from, let's say this candlestick. And then we had already drawn up our other zone where you think our target gonna be. Start a support again. Look at this, no drawdown, another 300 pips. Another 300 pips. If y'all don't know, y'all, we about to have a good trade in the week this week. I don't know what. Well, I eat mine on Saturday. Can't wait till Sunday night. I'm telling you, okay? Then what happens? This is a good example. Price is in our zone, right? We get stopped out right here in profit. We win the trade, right? 2 candlesticks, we win the trade. Price is back in our supply zone. So we like, okay, I mean, our demand zone. So we like, okay, this is support. We about to buy, right? So we get in for a buy, expecting price to go up to our resistance, right? And let's say we had our stop loss about here, okay? Right about here. We would have got stopped out. We would have lost this trade. But that's okay, y'all. That's okay. But let me show y'all one more thing. I can show y'all one more thing because I wanted to end the call at 4:30. But let me show y'all one more thing. Check this out. It's something called, we can monitor our loss. this is another concept that blew my mind that I didn't think about stop losses. Okay, write this down, y'all. I'll type it on the screen too. Your stop loss is meant to protect your account, not take you out of trades. Okay, this will blow your mind. Okay, not take you out of trades. Okay, what does this mean? Your stop loss is meant to protect your account. Our stop loss shouldn't be getting hit. So news affects the markets because news causes it to do crazy stuff sometimes, but really and truthfully, that's why sometimes if news is happening and you're not in a trade, don't get in until the news is over. So you can, because news could affect regular supply and demand. You know what I mean? Because someone could say something on the news and create an instant demand for something, and then buyers in the market, you know? So news is the, what you call it, the one-off thing to this stuff. But outside of news, guys, this works, okay? This works. Now, your stop loss is meant to protect your account, not take you out of trades. What does that mean? See, I used to trade the wrong way. I used to trade thinking about my stop loss as, you know, lowering my risk and getting me out the trade if I'm losing. But no, you're supposed to trust your trade where stop using these tight stop losses, because you don't expect your stop loss to be hit. It's just so it don't blow your whole account, but you expect to get some breathing room so that your trade could go in your direction. But here's the thing. You want to also be taking a look at your account. So if you, at your trade. So let's just say this particular instance right here. Let's say this was our trade setup, right? We were looking for price to go up and our stop loss was here, okay? Now look at this. Look at this, y'all. And this, after the key to this whole thing we're talking about tonight, y'all, is you got to go practice. Watching me do this ain't gonna help you. It's like math. You can watch the professor do the problem on the board all day, but until you get your pen and paper and try, it look easy when he doing it until you got to do it at home. And you're like, I don't remember nothing. Okay, so you got to practice. So check this out. Let's just say you entered the market on this candlestick right here, okay? Because you said prices in our supply zone, our demand zone, we about to put this thing about to push up back to our level, back to our last level of resistance. But guess what? And let's say you have your stop loss all the way down here, because you ain't trying to have your stop loss too tight. You want to give it breathing room. But I know sometimes you say, Sophie, that's too much. But let's look at this, y'all. Risk to reward. This is 1.69. This means this is still less than a 1-to-1. Like this is still more than a 1-to-1, which means that you still risking less to gain more. Because look at this, you risking on this particular trade. And remember, guys, this is the daily. So this is going to be huge numbers. We typically don't trade daily. But this is risking 192 pips to gain 323. That still ain't bad. Okay. 1-to-1 is the absolute worst you should do, where you risking 323 to gain 323. You don't want to do that too often, but you could set your stop loss there. But check this out. This is keto. Your stop loss could be set at a 1-to-1, but you want to manually monitor the trade, because check this out. If we entered on this and we expected this to play as a support for price to go up, right? But we look at the next candlestick and what happens? Price breaks down with momentum, right? And then look, it comes down even more. And then what happens? What happens with this candlestick? It comes back and turns it into what? Resistance. So you know a break happened and it's retesting resistance. You just close the trade manually. You don't have to wait for your stop loss to get hit for you to lose 192. When you see this turn into a resistance right here, now, right? You enter this trade here and you get out here, you only lose 19 pips. Your stop loss is 100 pips, but you notice that it's broke with momentum and created a resistance. You know, if price breaks and creates a resistance, what's about to happen? If price breaks a support and creates a new resistance, what's about to happen in the market? Nope. If price breaks your support, right, and it comes back up and creates a resistance, it's about to go down. So you know, even though you entered for a buy position right here, you see that price broke and then it retested and created a resistance, you know price about to sell, get out the trade. So just close it manually. And guess what? Because it created the resistance up here, you can close the trade all the way up here, close to your entry, rather than letting it come down here and hitting your stop loss. Y'all follow me? That makes sense? So even though your stop loss is wide, you can just close the trade. And that's what we got to get better at, knowing when to cut our losses short. Don't wait for it to hit your 192 stop loss. From this broke and created a new resistance, be like, yo, this thing about to sell. Okay, I in a buy position, I need to close this because this thing about to tank. Just get out. Just get out. Make sense? So if you did that and you got out here, yes, you would get over the loss, but it's going to be minimal loss. It's going to be minimal loss. And then price comes back and look what it does again, y'all. Price comes down here. We got out with the loss. It did sell off to down here. And then what it did, it broke through our resistance with momentum, retest it, create support. What's about to happen, y'all? What is about to happen in the market right now? The market is about to buy. So you can get in for a buy position, right? Now, here's one more example, and then we almost done. Is this helpful, y'all? I know y'all seeing it. Check this out. So market breaks with momentum, retest right here. Retest right here, right for a buy. Hold on. Sorry. Okay, so retest creates a support again. Okay, support means we're looking for a buy. So let's say we enter right here. Okay, let's say we enter right here. The normal us would say what? We expecting price to go all the way to our resistance, right? And our stop loss going to be down here below our last set of wicks. Right? Let's just say right about here. Now what happens? Price pushes up, rejects, pushes up to around the same level, rejects, pushes up a little higher, but same area basically that was over here. Y'all see, it rejects, comes up a little higher, rejects, comes up a little higher, rejects. So if you look at this, guys, and that's why we have to start paying attention to our trade. Yes, our target is up here, but it's showing that price is coming up to about here and rejecting. So when price comes up to this area, this might be a good time to close the trade manually. Be like, my price coming up in this area and it keep rejecting. It doesn't look like it want to go higher than this. Close the trade. So instead of getting 317 pips, you just close it around this area and grab 130. Winners are winners. Winning trades are winning trades, guys. It don't matter. It don't have to hit your TP. Profits is profits. Does this make sense to y'all? I know it does. I know y'all understand. Okay, I know y'all understand. Okay, just write these last two notes down and we done. Okay, how to trade support and resistance. You buy at support and you sell at resistance. Buy at support, sell at resistance. And there's two types of trades that we can trade based on support and resistance. We can trade, okay, we can trade the bounce, which is the bounce between a support and resistance zone. Okay, we can trade the bounce, and we can trade the break. Okay, the break, when it breaks the zone and retests to the next support or resistance. So you trade the bounce, which is basically when price is kind of consolidated, or you trade the break when price is starting to create a trend. Y'all, let's just, if we stick to this, it ain't gonna be hard. Okay, now this is just fundamental. There's something called Confluence, which is like other confirmations to indicate that you are right, but I don't want to get into that now. I want us to just master support and resistance. But how do you do that, guys? You got to practice. You got to go and get TradingView, pull up a chart and mark up the zones, look for the levels, look for the zones. Look for them. Start training your eyes to see it. Because I know we're doing this together and it looks simple, but when you go on your chart, when we hang up, you're going to be like, where do I start? I promise you. Okay, so you have to practice. You have to practice. You have to practice. Okay, you have to train your eyes to get these zones. But the great thing about it is if you start training your eyes and you understand the zones, you can start making money in the market because you understand the zone. And this is literally what we do in HFX. We're just doing it like on the 5-minute time frame. We're just doing it on tiny, tiny, tiny little levels. You know, price this, looking at this right here, I can see a quick support, boom. I mean, a quick resistance right there. And I can see right around here is a quick support just because it's wicks right here. So now support isn't a line. This is the 5-minute time frame I'm on, right? Support isn't a line, it's a zone. So let me take a rectangle, look for the top of my zone right here, right? And I'm gonna go right to this level right here, boom. Look at my support down here. I'm gonna say right from about, right, let's look here, wicks. Right here. Boom, pull this way, right? Okay, cool. Let's just look at right here. So here, boom, resistance. So check this out. If this was the zone I drew right here, and I'm gonna just turn this one green before we go. Okay. If I was trading HFX, yo, if price gets in my zone, I'm buying. Right? 1 minute, 2-minute candle. If I got in here for a minute or 2 minutes, boom, next candlestick. I'm above where I entered, win. Then I'm not getting in this area. I'm waiting for price to get to my resistance. Oh, price is in my resistance. Boom, 1 minute trade. Boom, I win. Y'all see it? Price comes back right around wicks the support. Boom, price about to buy. 1 minute, 2 minute, you win. Guys, like practice. Okay, practice, 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 practice. Was this call today valuable? You have to do it. You cannot just watch. You got to do it. You got to practice. So everybody, guys, your homework for the weekend, okay, is you got to practice analyzing and identifying support and resistance levels, the zones. Mark it up. Mark them up. And then like drop it in the group chat and just be like, is this right? How does this look, y'all? Like, let's use each other as feedback. Like we can all hold each other accountable. Just draw it up. And even if you get all wrong, okay, it don't matter. That's the only way you're going to be able to get it right. All right. You got to do it though. So just go pick a pair. Doesn't matter. All of the pairs work the same, y'all. Okay. Go pick a pair that you like to trade or pick a pair you would like to trade and go mark up supply. Just go to the chart, go back in time. Okay. And look for zones and mark up supply, support and resistance zones. Screenshot it and then drop it in the group and be like, how does it look? And we're going to give each other feedback. Okay. We're going to give each other feedback. I'm going to drop the recording in a little bit. So what I'll do as soon as I end it and Zoom sends it to me, I'll upload the recording so that we can put this, we put this in the archives for us to watch over and over and over again. And guys, I think this will be a great training as well for you to share with your customers when they get started in business, as a good tutorial on support and resistance, because this is literally the foundation, y'all, of trading. If you don't understand support and resistance, you don't have no foundation, okay? Your trading account will look a little scary. So you want to take time to learn this, because once you learn this, adding indicators and adding different strategies, that's only gonna make you more accurate and more precise with like your entries and stuff, all right? So I appreciate y'all, man. I love y'all. Y'all have a good Saturday. Stay safe, stay blessed. I do have a launch call for someone at 7 today, and then I know we have an 8 o'clock presentation tonight as well, all right? So practice, 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 study, 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 guys. Y'all, let's go out here, put this chart work in this weekend, and then let's have an incredible, incredible, incredible trading week, all right? Y'all have a good one. Take it easy.